This morning, the U.S. government released its official report card on inflation. We got the April CPI number. Now, the consensus was for a big decline over the March number because March number was hot. 1.2% was the month-over-month increase in CPI. The year-over-year increase was 8.5, and that was the high watermark so far for inflation. Now, again, these are the official numbers. The actual numbers are probably twice as high as what the government admits. So that means the people are dealing with the reality of 15 to 20% inflation. They're not living in a fantasy of 8% inflation, even though that fantasy is still pretty bad. Reality is that much worse. But again, the markets were looking for an improvement, and we did get an improvement, but not nearly as big an improvement as the market was hoping for. The expectation was for a gain of 0.2 in April CPI. And again, it's still a gain. So high prices were still expected to go even higher. So if Americans are struggling with the price structure we have now, the struggle is going to be even more difficult if today's high prices continue to go up. And everybody expects that they will. Nobody is talking about reversing the tremendous gains in prices. Everybody is simply talking about slowing down future gains, but building on past gains. Well, we got the number and it came out as up 0.3, 50% bigger than the 0.2% that was expected. But the real problem was the core, because the core number was supposed to go up by 0.4 and it went up by 0.6. Again, that's still a 50% miss, but the core CPI seems to be a lot more important when you strip out the volatile food and energy. And that, I think, really spooked the markets. Now, the year-over-year numbers have come down from the March peak. And that's the first time in many, many months that we've seen a sequential decline in the year-over-year. So the year-over-year CPI is now up 8.3%, and the core is up 6.2%. It was 6.5% in March. But this is still a big number, and there is no indication anywhere that the Fed has made any progress in its inflation fight. In fact, it hasn't even really begun its inflation fight. Even though we have a 50 basis point rate hike under the Fed's belt, we're at 75 basis points basically to 1%. In an 8% inflation world, even if that's a fantasy world, the rate is too low. The Fed is further and further behind the curve by dragging its feet. And look at the balance sheet. The balance sheet has really not even begun to shrink. In fact, last week, I think it ticked up a notch. Not very much, but it didn't go down. We have a long way to go to actually withdrawing all the liquidity that has caused all the inflation. The inflation was the expansion of the money supply. Now they need to contract that money supply, but they're not even coming close to doing that. They're talking about starting it, but they haven't actually done it. That's why I keep saying that the Fed is just pretending that it's going to fight inflation. Because if it really wanted to fight it, it would be doing it. It wouldn't be talking, it would be acting. Rates would already be much higher. They wouldn't be talking about these future rate hikes. They would raise rates right now in the present. They wouldn't be talking about shrinking their balance sheet in the future. It would be shrinking right now. The reason they're not fighting inflation is because they can't, but they can't admit that, so they have to keep pretending they're going to fight it. And for now, the markets either believe the Fed or they're pretending to believe the Fed. And in fact, before we got these numbers, the markets were optimistic that we might get a benign number. Stock market futures across the board were trading with solid gains. I think about a 1% gain across the board from the Dow to the NASDAQ. Gold was up about 15, 20 bucks. Everything was higher going into this number. And when the number came out worse than expected, everything reversed. Stock futures sold off negative. Gold went negative. Now, gold actually ended up recovering most of those early morning gains, and it still closed with a nice gain, although that gain was not enjoyed by the gold stocks. Gold and silver stocks continue getting crushed with other stocks, even though gold itself is still hanging out. I think we're still above 1850. So gold is holding in strong, but gold and silver stocks are caving. Again, all because investors actually believe that the Fed is going to successfully fight inflation. It's not going to do either. It's not going to fight, and even if it fought, it wouldn't succeed. It would lose, but it's actually going to lose by default because it's not even going to put up a fight. That's how badly inflation is going to win. The market just hasn't come to terms with this reality.